successful series, right?
Yeah, we had some great feedbacks about this series, and we try to bring you every month some updates, what's going on the market, what's going on with the inventory, about the prices, about the interest rate, so you can be well informed and then make the best decision in real estate.
Right, right. Very good. So let's jump right on it, Ilya. Well, yesterday we had inflation that came less than expected, and even the stock market like perceived this as a great thing. But let's jump right on it and talk about real estate. So, what do we expect for the year end for the interest rates in real estate, Ilya?
So the best news is that everybody is forecasting that by the end of the year, we're going to see interest rate going back to 5%. Some are 5.5, 5.7, even something that they might go even to 5.1%. So this is the best great news on the real estate market. It'll give some leverage to the buyers and create more affordability for them buying a real estate property in 2023.
Very good. So let's jump right on the slides here, Ilya. Right here we have a few slides. So this is actually a familiar slide. It's the third time we use this updated slide, and we can see that when the interest rates go down, the buyers seem like they're getting rewarded to go out there. They qualify for more money, and we see it even in our own properties. Like, Ilya, what do you see in the market now?
Yeah, we see that the buyers confidence is coming back, and not only they accept the reality about the interest rate, but at the same time they think that real estate is the best investment, and then this time is still a good time to buy real estate property. And as the rates are going down, then definitely more buyers will make quicker decision, and they want to use this opportunity to buy any real estate property that they would dream about. And this is a great news for the sellers as well. So if you are a seller out there, you have to keep in mind that the buyers are confident about the value of buying real estate property. So if you think of selling, I would go on the market right now. So
right. And let's say something about, Ilya, we work with buyers too, and sometimes you see when they qualify for more money, they're willing to overbid and spend more, right? The problem is when their pre-approval is maxed out, and then they cannot come up with a little bit more money. But people are willing to pay a little bit more to get a home, and this helps them. When it gets around 6 or 6.5%, they can have a little bit of a bigger pre-approval, right, Ilya?
Yeah, that's true. So the buying power is going to be increased, and we work with buyers and we show them properties that they say, we really love this property, but I can't qualify for that price. They don't think that property is overpriced. They actually know that the buying power has gone down because of the increase of interest rate. And we see some smile on their faces now that the interest rates are coming down. And that's a good news, and that's one of the most excitement of a buyer when they'll get an offer accepted, go through a smooth transaction, and get the keys at the end. They're really enjoying it.
So let's see now the next slide, Ilya. You can take it over. What do we see? It's a great slide, right?
So yeah, this is this is home price appreciation. This information is based on Case-Shiller study. Overall, nationally, we have appreciation 3.8%. And there are some states that have seen depreciation like Portland, San Diego, San Francisco, Seattle. However, since we are living in East Coast, and East Coast is really strong, and you can see Boston, it has 4.2% appreciation, which is higher than the national average. And we see Charlotte has the highest appreciation, like 8.1%, and definitely Miami is the winner here, like 13.8%. So that shows in one more time that the Florida market is really, really strong. So,
and you can see as well, like if you compare it to even Los Angeles or Las Vegas, and these like areas, they got a lot of people, moving from Los Angeles to Las Vegas, especially during the coronavirus. They didn't get as much appreciation. Like if you see, we are on this side of the US, we're doing so much better, right? Things are keep going more and more, higher, and that's great news for like the sellers, right?
Yeah, and we hear a lot that people are moving out of California or West Coast, and the
Right.
reason is because they see more opportunities in other states, And I mean, know about Dallas has also 5.0% appreciation.
Right.
This is great news. And but
Right.
Florida again, look at these two cities like Miami and Tampa. Tampa was
Right.
10.5%, and Miami is the 13.8%. And
Right.
this is
Right.
this also I would add something that since many people are working remote, so they can work from everywhere, and that's why we can see some people are going to these states like Florida because they can work from home, they can work from anywhere. They will have a better quality of living, so as
Right,
well.
right. And not only that, but and the last point for this slide is if you guys are, thinking of relocating, right, going down to Florida, and as you guys can see, you can enjoy the appreciation of your home now in the spring market trying to sell and maybe rent for a few and then wait for Q4 to get a better deal down there, right? So this is another thing that you guys have to plan ahead and maybe talk to somebody that can help you. Another one here that's a little bit different. It's the home price movement. So this has a lot of red in it, and the reason we wanted to include this slide is because, as you guys can see, this is January 2023 month over month percentage appreciation in 20 cities. And although most cities are in the red as far as the price movement goes, Boston again is not only green but is zero point 0.5 points higher than the national average, which is minus
Yeah.
0.2%, right? So in
Yeah.
Boston, what do we see, Leah?
Yeah, in Boston, we feel that every day. Properties that go on the market, they sell very quickly. We still see appreciation in towns. They have like great school system, and that's what Boston is. Is the way of living, like great schools. We have great hospitals here. Safety, it's much higher in Boston than other
Right,
states. So definitely the quality of living in Boston and Massachusetts, it reflects on the appreciation of also the home prices. So we saw on the previous slide and on this slide. So
exactly.
definitely
Mhm.
this is another thing. So you shouldn't focus on just the national news, but you should see what's happening in your neighborhood. And the best person to get advice will be your local real estate agent.
This is exactly right. New England is like leading the way, right, Ilya? We're doing great. So, what is this slide about?
Yeah, so I mean, again, we're talking about the real estate appreciation. This is a great slide, and this also tells us that don't listen to the national news, and listen to local news, listen to your local real estate professional.
Mhm.
And this shows well, once again, that New England is the winner. We have
Right,
like January of 2023, it's about New England is 2.0%, 2% appreciation.
right,
You can see
right,
some on other regions that we have also depreciation, but
right.
again, Northeast, it's is the winner here. So
Right, right, exactly. Okay, so right here, this is our favorite slide, is about home value declines that have they been stabilized or not. That's month over month percentage change, right? So the $1 million question that sellers wants to know, Ilya, it's when do I put my home on the market? Should I wait or should I put it now? So what does this slide show, Ilya?
So this slide shows us, and if we consider that this market is repeating, I mean, last year we had a very strong spring market, and we continue this year to have a very strong spring market.
Right,
This slide shows that when you put the house early spring, and this is the advice that we are giving to the seller, that you shouldn't wait like for the summer, But if you
right,
put the house early spring, then you can sell your property at a highest price in the shortest time
right,
frame. And
right,
these are two companies that have done this studies, Case Schiller and FHFA. So it shows that also, once again, that as the rate were increasing, towards the second part of the year, then
right,
prices were coming down. And definitely August, September, it was like the uncertainty that
right,
created the home prices to kind of soften a little bit. At the same time, we know that during the summer, a lot of people go away, they go on
right,
vacation. So you have to be on the market now. So if you are a seller, you think of selling,
right.
I should go on the market now. I shouldn't wait for July, August to sell my
Right, right,
home.
right. Like you guys know, there is a lot of factors go into it. Buyer demand goes down, like you said, in August. The inventory is like maybe a little bit more because there's not as many buyers years. But this, by the way, as well is on the national level. So if we come again to New England, we would see farther up the percentage change when it comes to spring, and then further down when it comes to the winter seasons, because again, the weather doesn't help here either, right?
Yeah, these numbers for New England are higher. So yeah,
Right.
definitely higher.
Very good. So, what do we see about this affordability, Leah? Everybody wants to know, okay, when can they afford a home, and are the homes are going to be more or less affordable?
Yeah, this slide pretty much shows us, how the affordability changes based on price of the property, your
Right.
income, and also the interest rate.
Right.
And here, the biggest effect that was done last year, or if we from January 2022 and moving forward, the interest rate were the main factor that did had a huge effect on the affordability. The
Right,
good news
right.
is that, as you see during the month of October, we see the red, which means that the affordability went down, and we know that the interest rate went to 7%, little over. But we can see that we from like October last year coming to January, the affordability has becoming better, has been improving, and as we can see now, we have the affordability is kind of improving a lot.
Right.
And if we refer to the news, that the interest rate by the end of the year would be coming down, then the affordability would be higher.
Exactly.
I would say for those buyers that are ready and they are on the fence, they're not ready to make a decision. They keep waiting about maybe prices to come down. I would
Right.
say to pay attention to this slide, because
Right. Right.
if the affordability improves, then we have more buyers coming on the market.
Right.
So if you
Right.
are a buyer, you have to think that you might be having more competition in the
Right.
future if the
Right.
affordability increases.
Exactly, exactly. It's like Dame Ramsey, the guy that talks about finance. He said the best time to buy a home is right now for the next 5 years, right? There won't be a time
Yeah.
like this. People forget that it's not just the interest rate, right? Again, the interest rate can be fixed. Everybody says that, but you can fix a home for 30 years, right? And then change the interest rate, but you own the home forever, right? So very good. Let's go to the next slide. So affordability at historic levels. Let's talk about distressed properties, Ilya. I mean, I know that around that time you were working a lot, and tell a little bit more about how was that time when distressed properties was on the market.
Yeah, that was the highest affordability of buying a real estate property probably in the last maybe 20 years, I would say, was when we had the market, a real estate market crash because of what happened on the market at the time. And you can see on the slide that maybe 2009, 2010, until 2015, the affordability was really, really high. As the prices becoming to incline, and also in the last couple of years, we had the interest rate. Also, we have an increase on interest rate that affected the affordability. But
Right.
today, we don't have any. I mean, distressed properties are minimum, maybe.
Right.
I mean, maybe one or two, and we have seen that we have. I mean, you remember that we showed a distressed property last week, right?
Right. Right.
First of all, sometimes those distressed properties might not be financed by the lender. So
Exactly.
even you are a buyer and then you're waiting for a foreclosure property, but if you have a lender, that property may not be financed. And
Right.
second,
Right.
since the inventory is so low, the lender or the lien holder who is selling a bank owned property,
Right.
they wouldn't sell at discount now. They're going to sell it
Right.
at fair market value.
Right. And not only that, but there is a lot of deferred maintenance in these homes. So people, they think they're getting a deal, but in many cases, you're not, right? Everything is falling apart. In very specific example about last week, like you said, the septic failed, right? So if you were willing to buy this one way or another, even if the bank doesn't finance it, you're going to need to spend, how much does a septic system you think costs around an estimate,
Depends on the number of bedroom, but I would say not less than maybe $25,000.
Right.
But the
Exactly.
other thing is that, I mean, you cannot even, you have to go to a different type of financing if the septic
Exactly.
system is failed. And in
Exactly.
that case, the interest rate might be higher on the new
Exactly.
loan program because you might get a construction loan. Other things that when you go to this type of financing, they require for you to have a larger down payment.
Right.
So no longer you can buy something like that with 5%. You might need
Right.
20% down.
Right.
And another thing that we have to keep in mind that the cost of remodeling or construction is really, really high, and
Right.
you need cash in hands
Right.
to do that
Right.
as well.
Right. And they will charge you points on the loan, right? So points on the loan, a ton of
Yeah.
interest, right? So very
And if
good.
you
So
don't
let's
have
go.
the experience, if you don't have the experience, then it might be
Right.
more costly as well.
Right, right, right. And it many
Yeah.
times turns out to be exactly. So the percentage of distressed property sales right here, you guys can see like that's exactly what we said. This has to do with foreclosures and short sales, right? You can see like this is plummeting ever since January 2012, right? There is no reason. I mean, nowadays people out of college they start with $100,000, right? So very few
Yeah.
people are actually going to foreclose on their home, and that's actually the last thing they're ever going to let go, right? People might not pay their credit card, they might not pay,
Yeah.
I don't know, their cars, but nobody's going to kind of let their home
Yeah,
go,
but
right, Ilya?
yeah, the other thing is that every homeowner today has a lot of equity.
Right,
So on average, every American that owns a real estate property, on average, they have 50% equity. So
right.
in order for that seller or that owner to be in distressed position, the
Right.
market has to go down by 60% under that
Significant.
50%
Right.
margin on
Exactly.
average, right? So which I don't think that we can see that. So
Right.
even
Right.
somebody has some difficulties, let's say maybe they have a loss of income, they're not going to be being foreclosed.
Right.
They're just going to go on the market and then sell their property for a profit.
Exactly.
And the only
Very good.
distressed properties that I've seen only those who have a reverse mortgage.
Right. Right.
That is another thing.
Right, right, right. Exactly. So, like, the reason that this didn't work out is because the financing was bad, right?
Yeah.
So, very good. Okay. So, right here we see monthly mortgage payments. I mean, again, everything is tied to the interest rate. I mean, what can people comfortably afford? That's to the national level again, because if we're in Massachusetts, that'll be probably double. But
Yeah.
as we can see, in October was the worst of the interest rates when they touched like 6.5 to 7%, maybe a little bit more. So now we see this, and actually it's a very nice little slope going downwards where the arrow is, because that's a good gradual like decrease, right, Ilya?
Yeah, yeah. So yeah, I mean, we touched base in the previous slide. So the
Right,
affordability is definitely improving from last year. From
right.
last October.
Very good. So again, let's see about this place. What was the forecast? Because people love to do forecasts, right, Ilya? They love to forecast something. So what is the situation here about what happened?
Yeah. So I mean, the forecast was that they would have an average of appreciation at 3.7%, but we actually have our current appreciation is about 4.4%. So
Right,
it's almost 1% higher.
right,
So most of the times we see more negative news. I don't
right.
see a positive news, but in reality, real estate has been proving that it's one of the best investments out there. So
Exactly. And then lastly, because last time we spoke about the inventory, let's talk about one more time what is going on. So there's a change in inventory about last month. What do we see here, Ilya?
yeah, so I mean, on national average, the inventory is going down, so it's about
Right,
2.7%. And I mean, we are feeling it on every day. I mean, we have more demand than we have inventory. So
right,
again, this is an opportunity for the seller out there, especially I would say for if you are someone that you've been living like 30 to 40 years in your property and you have built so much equity.
right,
Now is the best time to
right,
cash on that investment. Or another thing I would say, let's say you weren't happy with something that you bought 2 or 3 years ago, right? You still have a great appreciation there. Maybe this is the time to sell that property and find
right,
another one that
right.
will be your dream property.
Right, right. And exactly like you said, Ilya, I mean, especially if you're older, like people stop maintaining homes because they get tired, especially if they have a big home. So, somebody would happily come over and fix the things because, there is a cycle in life, right? Newer families
Yeah.
are eager to jump in, and then people, they just sometimes want to cash out and retire. And that's the cycle of life, right? So,
Yeah.
very good. So, what would be this last message, Ilya, to the audience for this month, other than thank you for watching? What else would we have to say to them?
I'll say that we are here from the Cobi Real Estate team at William Ravis. We are in Chestnut Hill, Massachusetts, and we serve all the surrounding towns. There's some positive news about the real estate market. If you like to know what's happening in your town, we actually have a monthly report that we provide on a monthly basis, and we can go over with you what's happening in your town, like inventory prices. So we have all this information at our fingertips so you can make the best business decision.
Great, great. Great. Thank you guys for watching. Ilya, thank you so much for the value, and hope to see you
Thank
guys next
you.
month, right? Thank you.
Thank you. Bye bye.